We're glad to have you back. After experiencing the worst cash crisis in the history of Nigeria's existence for the past 3 months, there seems to be a ray of hope for Nigerians as there are indications that the 3-month cash shortages rocking the nation's economy will fizzle out this week following banks' compliance with the latest directives of the Central Bank of Nigeria on cash dispensary over the weekend. This comes as analysts disagree on the likely impact of a cash crisis on the financial performance of banks, the business community, and by extension, the gross domestic product for the first quarter of 2023. Recall that Nigerians have been made to go through harrowing experiences across all cash dispensing channels following the hiccup that had emerged from the poor implementation of CBN's Naira Redesign policy that almost grounded the country's fragile economy to a halt, with a loss estimated at 20 trillion naira following the over 70% mop-up of currency by the Apex Bank. Let's talk more around this and, of course, associated with some burning economic issues. I'm being joined via Zoom by the Director of Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Mr. Taj, it's good to see you.
Same here. Thank you very much for having me on the show.
Well, finally, I don't know if you have much of the cash now, but I was able to get a little over the weekend. First, what would be your overview of the whole situation? How did we find ourselves at this point?
Well, I think we found ourselves as a country at this point because of lack of coordination, as well as proper planning and implementation of genuine ideas by the central bank. To my mind, I believe that they have good intentions, but there is lack of coordination. There is also lack of good implementation and proper planning for the entire policy. So it is not a bad thing for Nigeria to embrace a cashless environment or economy, but we have to put the right things in place at the right time and get the right people involved and carried along as we implement such great ideas. Otherwise, it will appear as if we do not really understand what we are doing as a country, and we want to make Nigeria to retrogress instead of progressing in line with global economies and either the emerging market economies or the advanced economies. So good idea, good initiative, but badly implemented in my view.
Well, some economists will follow or have opined that it will take some time before we could get back normalcy, talking about our bank transactions, how we go ahead getting cash and all of that, because it actually took some time for us to put our monies in the banks. We had to queue up, in some cases, to paying this cash when there were ultimatums and all of that. Now, this transition period, what does it mean for businesses? What does it mean for another Nigerian that has not had access to funds, has not been able to buy things and all of that? What does it mean?
I think it is really not difficult to understand, the implications of all these issues. The starting point is around the number of hours that people spend queuing up at banks. Those hours could be put into the production of goods and services. And it is not just for selected days. It happens that it has been on a daily basis. Nigerians are going to waste useful economic time queuing in the banks. That's the starting point. The second thing is the impact on small businesses is enormous. And I've been sharing my views across certain platforms to say that we may not really realize the issues or the problems that this policy has caused up until when we begin to see the GDP numbers for the first quarter of this year. There is no doubt that the trade sector will be materially damaged by this policy, because you have trade, and when you do trade, you have to pay for that service. So how do you pay when you do not have cash? Number two, transportation in Lagos and every other part of Nigeria, we all know, are done, transportation services are done via cash. You have to pay for your transport fare, and they are in the low denominations. They are not, something that you'll be, making transfers or paying them, via your ATM cards. So you are going to see the impact being negative also for the transportation sector as well. And if we look at, generally speaking, small and medium enterprises, it is going to have, a negative impact on them, in addition to the fact that they would have wasted their time queuing up in banks. And it is looking like we are going back to 35 years ago, when Nigerians used to queue up in banks to get their cash out from the banking, from the banking hall. So we moved forward away from that, scenario, and now we put ourselves back in the same, sort of condition because of, poor implementation of a good policy, in my view.
Let me follow up. One of the initiatives that were to be instituted to address this challenge, or that should be used, is technology, fintechs. They were supposed to use online platforms and all of that to, carry out some of these transactions. But clearly, it shows that the platforms were actually overwhelmed. Maybe designed for 10,000 transactions or 100,000 transactions, now hitting like 1 million transactions in a day. It got to a point where people transferred monies 3 to 4 days before people will get their alerts. A lot of issues this actually propped up. Now, what do you think was wrong around that angle? Because I think the CBN too ought to have mobilized all of this, fintech companies, maybe the deposit money banks, to know what the capacity is, what they can allow, what they can, what is possible. All of this goes around to proper planning. Again, what you said earlier.
You're spot on, because it speaks to collaboration, which is, what I mentioned, earlier, and also, getting the right people involved when you're making, plans for the entire economy. This is not a plan, that is restricted to, just the central bank or their workers, or not even the workers of the commercial banks. We are talking about, a plan that applies to well over 200 million people as a population. So they, naturally speaking, in my mind, should have carried along the commercial banks to understand what the capacity of their technology is in terms of daily transactions, and also how much, those transactions can handle. I mean, how much those technology can handle in terms of the size of transactions. Second thing is around the fintech companies. They should have been consulted, to understand, what the capacity is, as they naturally would have served as alternate channels for consumers or for Nigerians, to use when the commercial banks cannot accommodate the huge volumes. All these things were not put in place. And it is clear that they were not put in place because, number one, transactions were failing. Number two, even the fintechs, that came to the rescue also had, their own glitches as well. Number three, and possibly, the major one for consideration, is many Nigerians are also going to the banks, not to get cash in this case, but to complain of failed transactions on their accounts. At that point, we are seeing Nigerians in hundreds of number, queuing up, and you get to the bank and they tell you that your number is number 202. You're on the queue to complain that you have a failed transaction. So it speaks to bad technology or bad usage of it, because to complain to banks, you do not have to walk down there. You just have to use technology to make complaints, and then they get the problem solved. But all this were not happening, so Nigerians had to go to the banks themselves to make complaints, and also wasting useful economic hours in that regard. So I think all these things could naturally could have been avoided if the central bank and the government at the federal level were coordinated at the beginning, and they carried along the relevant institutions to ensure that we have a smooth transition to whatever they call cashless policy, instead of the cumbersome approach that has cost us a lot of money as an economy, in my opinion.
Interesting stuff, as usual, Mr. Taj. Now, I'm worried about the financial space itself, that's the banking system, because we see that customers are shifting to all of these online platforms. So I won't mention names, but you know what I'm talking about. And many of these traders now see so much confidence in all of these online platforms, and that is generally what everyone is using at the moment. Some are even wishing to move their monies from the regular commercial banks to all of these online banking apps and platforms. What impact do you think this could have negatively, well, maybe on the banking system?
Okay, so maybe because before I begin to talk about the impact it could have on the banking system, I'm happy to advise Nigerians that they should be careful, to the companies or fintechs that they move their money to. Number one, that entity must be a regulated entity before you consider moving your money away from the commercial banks. Number two, you must ensure that the entity you are moving your money to has a good risk management framework, so that you do not lose the little money you have in your bank account. And coming back to how it impacts the banking sector as a whole, I think it is negative for the commercial banks, because they most likely are going to see a migration of customers from the regular commercial banks to these small, fintech companies, and also, small microfinance banks who are currently offering super services to Nigerians. So what it means is a reduction in the transaction value that the banking sector will witness as per the commercial banks. And even if the volume or the value of transaction does not reduce, the growth rate is going to sort of slow down, and that will indicate the impact of the migration from the large commercial banks to the small, microfinance banks, and also the small, fintech banks. But in all, as we speak, my sense is that one should be wary of the risk factors and the inherent risk in moving your money from a large bank to a small bank, or to like a micro bank in this case, just because you are facing short-term challenges. Nevertheless, the banking sector as a whole is going to feel this. We do not rule out the possibility of them generating higher transaction value related income in 2023. But in terms of customers' confidence, customers' trust, they most likely are going to lose a considerable amount in that regard, in my opinion.
Great stuff, as usual. Well, we always like to end with an outlook. As it is, many say in a matter of months we'll still feel the impact of all of this, even if everything normalizes. And it's just for till the end of the year. So if we don't do what we ought to do before December, this same situation might play out again. What is your advice and what is your outlook?
And I think it is going to play out again, in my view. And the reason it's going to play out again is that I'm not sure many Nigerians are, I'm not sure any Nigerian, even in this case, is going to the banks to deposit money. Everybody is going there to go and withdraw. So when you withdraw, you do not want to go and put the same money back, because it is hard to come by. So we are going to witness a situation where many Nigerians will be making withdrawals, spending a little as they can, and keeping the rest under their pillow instead of going to the banks to deposit them. That most likely is going to play out, till like, December, in my view, by the time, by which time the old notes will no longer be, a legal tender. But in terms of, outlook, I think, Nigerians, should still be cautious around, depositing money with very small entities that are not regulated by the central bank or that are not regulated by, Securities and Exchange Commission, because some of them are luring customers because they have some investment products. My sense is that some Nigerians most likely are going to lose money before the end of this year if they patronize those that are not regulated and those that do not have strong risk management framework. When you leave your money in the large commercial banks, we have the NDIC there, where your deposit is insured, by the banks, but the same cannot be, vouched for. When we talk about, the small and the fintech companies that we now see around these days, I think it is still going to be challenging before the end of this year, in my opinion.
I must thank you so much. Interesting conversation with Director Research and Strategy with Chapel Hill Denham and Mr. Tajuddin Ibrahim. Do have a profitable day.